Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 2nd of April, 2019, election day here in Chicago. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing a market that is pretty much neutral in terms of how it's pointed. Um, We are really not doing much. The VIX futures are slightly higher, but overall it's pretty flat. Not seeing too much in terms of a driver this morning, and that's where the market sentiment is. It's really just sideways. The S&P is trading just above its close, just 4 ticks above its close from yesterday. And that's pretty much seen across the board in the indices. So the Nasdaq's up 0.07 percent, the Dow is down 0.08%, and so on and so forth. So that's where we stand in terms of what we're looking for moving ahead. This morning, we're looking for the only real release that's remaining. We did get U.S. durable goods. We got negative 1.6%, expecting negative 1.8, and we get API crude stock change after the close at 4:30 Eastern, expecting negative 1.6 million. And then the China Services PMI comes out this evening at about 9:45 Eastern. So the point being, the deck is pretty clear for today in terms of what could disrupt the auction. What do we have? What did we have yesterday in our review segment? Yesterday, we were gapping open in the 2858 area, 2859. And the main expectation shown here as scenario one is for dip potentially as far down as 2850 or thereabouts, and then looking for an impulse higher for the market to get tangled at 2860 and then to push into 2870 with the cap expected around 2874. 2874 was the expected top yesterday, or the expected key target above, and it pushed to 2873.5. Scenario one was on point. Scenario two was not. The market did not have much reversion in it. It did open up in quite a choppy auction, which, if you're not paying attention to the context of the auction, then you would probably get chopped in there. The fact is, and I want to make this clear, it's very easy to jump on someone else's idea of moving average crossover or an OR break trade or whatever, and the trade may be valid, but just be aware that at the end of the day, you still need to understand the auction and what it's trying to do. So if you're not understanding that yesterday clearly opened out of range, we have and we don't know how it's going to open. There are two scenarios when we open out of range that could dominate. One is an open auction that is responsive. In other words, the market sees itself above the prior auction and becomes responsive, and therefore sellers step in. It attempts higher to see if there's any interest, or for those who are interested to buy, to get their business done. And then what it does is it turns over, and then it starts to sell, and the aggression shows up on the sell side. How do we measure that aggression? We can use many different things, rate of trade, and so on. I use delta. And then we would see that there's a responsive, the market tries higher, and then we would see a responsive push down in the form of an impulse that then continues, and that's called responsive selling on a gap up. This is telling us that the market's likely to look for equilibrium, and it does so by moving into the prior days or towards the prior day's range. The other way that an open auction out of range would resolve itself, or gap out of range would resolve itself, as initiative in which the market then generally drives. It opens, it ticks down, maybe one or two ticks, and then it just drives higher. And what it's doing is it's moving away from the prior auction, which means that participants are seeing a strong incentive to move towards value, and value is now higher, which then triggers off all kinds of algos, triggers off systems that are based on some sort of a lagging indicator, blah, 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 and that continues to feed the auction to the upside. Yesterday, what we got is an open auction out of range in a classic sense. In a classic sense, in that we just completely went sideways. And so if you're someone who's trading a break of the OS, break of the OR, something like that, or you're trading the stock zone or whatever, this is a key area up here, 28.59. It's marked in red in the stock zone. Pretty important area. If you're trying to position yourself in that area, you either had to have a pretty wide stop, or you got chopped to pieces and had to sit out, and wait for the market to continue. And it took it forever. It did push up into 28.63.64 before it pulled back, but the pullback is through the mid. And remember, when we have an open auction, we've got to be careful with that mid slash VWAP slash opening price and the opening swing. Open auctions are notoriously balanced. That's what an open auction is. It's basically a market that's not seeing a clear direction. And so we had to just sit and wait for it to kind of set up. So we ended up yesterday with a pretty strong tight profile. So let's color that profile in. Let's do a shaded profile, make it red. And you can see how that profile is really fat, week high, week low. And it's as the market started to push higher, it started to kind of expand upwards a little bit. And even then, it's just building these high volume nodes. There it is. It comes back. The point of control shifts. And you could see as the market forms, it is becoming more and more normal in its distribution, right? It's checking higher prices, but where does it come back to? It keeps coming back to the point of control. And it just keeps reverting back. So although we have an opening, although we have a market that is in a gap, what we are in fact seeing is that it doesn't have a high rate of conviction. It doesn't have a huge incentive to push up. And so as it pushes up, you could see the top there. It's building more and more, and you end up with these really weak highs. There's the 70, and then there's the 70 again with the zipper. And so that's the kind of day we had yesterday. And then it ultimately ended up pushing to the target. The target was 74, got to 73.5 before it pulled back close to the mid. It went right back to the high volume node down here, this balance that we had down here, before it finished on the edge. The thing to note about yesterday is that it is in fact a trend day up. We classify this day as a trend day up. Why? Because it one time framed up on the 60-minute. It finished in the upper quartile of the range. The caveats of yesterday are is that the point of control didn't shift to the upper end of the range. We'd like to see a point of control on a trend day that's migrating, because as price moves up and the market discovers higher and higher prices, that's what a trend day is. It's a price discovery. It tends to move its value up with it and drag the point of control up. And when we have a point of control near highs and the market closes near highs, we expect the market to continue higher overnight. And we didn't get that at all. We kept our point of control down here. And so, in essence, the market kind of got away from its value, right? So it got away from its established value that day. The low volume node at 64 and a half is very important now as an up down line, and then beneath there we have the 28.50 down here, and then beneath that we have 28.44.50 as key areas to test if we roll over. But remember today 28.64.50, and note that the overnight low was 28.64.50. It went right to that low volume node before it found support. So the market is paying attention to that structure, at least those participants were. So that's what we ended up with yesterday. It did not gap and go right away. There was some conviction from the buyers, but I got to tell you, it wasn't what I expected for the first day of a new quarter. We expect the OTF to participate, to lift, especially after a strong Q1. We came into January with a very strong market, all the way through to the end of March. And so you expect more buying on Q1 as on Q2, the first day of Q2. Generally, we expect more buying coming in as funds or institutions position themselves to take advantage of a strong market that's likely to continue. So yes, the gap up was expected, or at least the trend up was expected to 74. And the way it did it yesterday was a very, very grindy, kind of balancy, choppy way. But that's just the nature of the market currently. Again, the point of control remained inside the point of control, inside the IB, and that's not expected into this. So don't be shocked. Don't be shocked if it tests higher, rolls over, and starts moving towards 50 over the next couple days today. I don't know what the time frame would be, but the way this is set up is that it's made a good go at it, but I see this gap below us getting filled fairly quickly. The overnight session, wow, this is a long review. The overnight session, pretty steady. As I said, the market opened, retested the open in yesterday's close, moved to the low volume node right here, and has been rallying since the European Open, right in there, showing some strength. A weak high on the top. Let me show you real quick the overall heat map. Now here's an interesting thing. There's quite a bit of liquidity as the market came into this these higher prices. So the white here represents liquidity. White below the last traded price, which is this. Wow, it's a terrible color. Let's pull yellow in. So the liquidity that's below the green the green is the last traded price. So there's quite a bit of liquidity after that low is put in that remained in place until about 10:15. And it looked like it just ended up lifting the market right there. You could see somebody came in and just lifted the market strong right before the European Open. By the way, the Europeans shifted their clock as well this Sunday. So we're back to 6 hours to London from Chicago, and 7 hours to Frankfurt and so on. So the closing hour of the European session is back to normal. But as we push higher, we see liquidity come in and kind of hold steady and trade out. So here's the liquidity at 70. You can see it kind of coming in and trading out. You see that? There's quite a bit of overhead yesterday as the market pushed higher, leading me to further believe that in the short term, we're likely to rotate down and entice more buyers. Look at that white area right there. Really strong liquidity coming in as prices pushed higher and the delta pushed up into the close. Something to just kind of keep in the back of your mind as we're moving along here. Let's take a look at what we're expecting for today, as I'm running out of time here. Today, so the gap mid below us is 48 and a quarter. We do have a big area at the mid-century at 28.50. Pay attention to those levels. Coming into today, we're opening at the upper end of the range, still in the upper distribution from yesterday, so still fairly strong, still relatively strong. Let me see what's going on here. Last is on top of the point of control. Okay, so we're opening right here. I'm looking for an open auction that pushes, that drives a little bit into this 28.78 area. This is a pretty thick stock zone here from 28.78 to 28.80. I'm expecting this to stall out. I'm looking for the market to rotate down and test the 64.50 before it consolidates into the close today. I am looking for a higher high, higher low, but I'm looking for the market to kind of run out of steam. Barring news, I do look for the market to push higher and then to rotate back down. It looks tired to me in terms of order flow to the buy side. I think the buyers did a good job of pushing in early and are probably looking for lower prices to be re-enticed. So the secondary is a push down, a slide down into the overnight low, a bounce up. We're looking for that low volume node to be tested, consolidate for a while, and then push into the point of control from yesterday and back to this magnet at 28.58 to probe yesterday's low and start moving towards 28.50. That's the secondary. Because I have two pointing in the same direction, the third is likely as well. This is a push lower, consolidate, push up, consolidate at that 76 to 80 level, and then start to move towards 28.86, 28.88, becoming the next key target above. Those are the three scenarios, and it's just now, these are my plans for the day. The first plan, the primary scenario being the most probable, what I expect to be the most probable. I'm not telling the market what I want to see. I'm not dictating what the market should do. I'm simply creating plans for where I think the market might get tangled if it pushes up or if it pushes down. Now it's about watching the market trade and then responding to what I see in terms of what it tests and where it fails at. Okay, this is what we're looking for today. Good luck, and I'll catch you tomorrow. Take care.